You guys asked for it, and here it is. Casey recorded a short tutorial on trading breakouts with options. It's coming right up. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. You guys let us know how much you wanted to use options for these stock breakouts, so here it is. Casey has recorded a short tutorial video on using options for breakout trades. I'll share that video with you shortly. We'll be exploring options going forward, so share any questions you may have in the comments below. There hasn't been much in the way of setups this week, so no new trade pick today. I expect it will all pick up again next week. I'll talk about a trigger that may or may not happen today. The volume is pretty wimpy, so we may not get it at all. I'll also cover a trigger that I stood aside on because of low volume. We'll also talk about our two open trades. Then we'll look at Casey's options training and today's trading maxim. It's Friday and holiday season. Remember to click the subscribe button and hit that bell so you don't miss any of these great training sessions. All right, here are the charts. The US dollar Mexican peso weekly setup is looking pretty good today. Pushed down a little bit right there, but it's on low volume, so who knows where it'll end up. Still in this and waiting for it to hit first target down here at 1866.77. The Euro-Swissy daily setup triggered last week, but it's been kind of sideways ever since then. But that's kind of expected on the last week of the year. So we're just going to stick this one out and see how it does next week. This is the daily silver chart with a setup from a few weeks back that broke out of the wedge last week on this candle right here on December 19th. But it did so on about 56% volume. Since the close was so close to the top of the wedge, I probably could have justified redrawing the wedge right here with this dashed line, which touches the top of this pin bar right here. Then the breakout would have been on this candle with 77% volume last Friday. We could have taken it half size and it would have hit first target by Christmas Eve right here. But I didn't, so we didn't. The reason I didn't is mostly because I was trying to avoid justifying trades this time of year. Looks like it would have been a nice setup, but hindsight is always 20/20, right? Think about how it looked on December 20th when it triggered. Never really know exactly what it's going to do. And with low volume this time of year, I thought it would be better to just stand aside on this one. Here's the weekly gold setup I was expecting. Unfortunately, it's on very low volume. Right now at about 12:30 New York time, it's only about 34% volume. So it's unlikely to hit the 75% by the end of the day that we would require to get a half-size trade. So I may have to stand aside on this. So watch it. Are you ready? Here's Casey's video on options trading. I'll be back afterward with some additional info.
Hey everybody, this is Casey Stubbs and glad to be here. Tim asked me to help out with one of his trades because you guys have asked him about how to trade his strategy with options. And so Tim had a really nice juicy setup on Amazon. I'm not sure if he actually shared it in a video or not, but this was the setup that he was looking at. And as you can see, we really had a nice breakout yesterday. Really nice, huge. And you can see we got a good volume to support it. So the way Tim trades is he likes to trade the breakout with a volume confirmation. We have both. So this is actually before market. The market hasn't opened yet. Normally we would put the order in at the close. So it would have been the trade would have been taken yesterday. However, I didn't get a chance to do it at that time, so I'm just going to do it for training purposes to show you how to do it today. But normally Tim takes the trade at the end of the day, and you guys can set up your own rules however you want to trade this particular strategy. You can do it at the beginning of the day, the end of the day, the middle of the day, whatever it is that you have set for your specific system. I think one of the most important things, though, is to have a system and a habit. But anyhow, I'm going to show you how to trade it with options. So the way that Tim trades it is he takes the entry on the close. And so we had that yesterday. Now, what he does then is he uses the ATR for the stop loss and the target. Now, with options, you really can't do that. So what you're going to do instead is you're going to calculate the total amount of risk that you're going to risk on the trade. And so in this case, we're going to do 2%. And we're going to break that into two specific trades, trade 1 and trade 2. But we're not going to use an ATR stop loss or an ATR take profit. And I'm going to show you exactly how we're going to do it. So let me pull up our options account here. And so for this this scenario, we're going to use the Thinkorswim. And I'm going to just go ahead and type in Amazon. And then if we click it, we'll get the options here for Amazon. And you'll notice that it gives you a list of different types of options to trade. And all this is when, if you're confused about this, and I'm not going to go into huge options training because you can do that research anytime. Maybe we'll add some on the channel later if you ask for it. But just to get started, this is the date that it expires. And so if it expires, you have to close the trade. And whether you have money or you don't, that's going to happen at the close. And so this one closes today. This one is next week. This one's the week after. And these are monthlies. See how it says weeklies every week? And then we're going to do monthlies. So I'm just going to do the monthly, which is January 17th of 2020. I'm just going to use that. And then I'm going to pull up the actual options chain. And you can get a more list here to see the full list. It can be a little intimidating to see the whole list. So I'm not going to do the whole list. Let's just do 12. And it goes around the current price, okay? And so the current price is right here. Let me pull the chart back up just to verify. Or actually, it should say somewhere 1868. There it is. 1868 is the current price. And so the price of this option, and what we're going to do is we're going to actually buy a call. And I'm not going to get into any of the other stuff. If you're going to buy a call for the long trade, okay, that's the only thing we're going to talk about right now is buying. We're going to buy a call. If you did want to sell, you would actually buy a put, right? So you can either buy a call or a put. A put means you think it's going to go down. You're basically expecting the trade to go down. If you buy a call, you're expecting it to go up. And so at the current strike, 1860, which is right around here, the price of this option is $40. And as the price goes up, as you can see, the cost of the option goes up as well. So if we're expecting the price to go up, we could actually buy it a little lower depending on where we think the target's going to go. And so Tim always uses the ATR for the first target, and so let's go ahead and pull that up. And so he calculates the ATR here to come up with the first target, and we're gonna say that it's around 1920. I actually don't have the tool that he has to calculate that. So I'm just going to make a good estimate. So we're going to estimate 1920. Now, if you know how to calculate the ATR, maybe Tim will chime in and fill this out for me a little bit later, because we're going to do this video together. You can calculate the price, or Tim will chime in. But 1920 is the price of where I'm going to go with target 1. And then I'm going to go with target 2 around 2000. Okay? So that's 1920 and then 2000. That's just how I'm going to do it. Because in the options trades, you can't really trail a stop. You will just wait for it to hit a certain price, and then you can close the trade if it hits it before your date, which is Jan 17. Now, another thing to note, what you want in options is a quick burst. You want the price like this huge burst. The option went crazy yesterday. Well, we need another burst like this. Like the last time we had a burst 1 and 2. So what we could get is if we get another day like yesterday, a boom, like I'm expecting, well, then we could get our fill really quick. And so we could hit that first target very fast. And so I'll show you now. Let's go ahead and actually take the trade. So if I'm expecting the price to get to 1920, I could actually drop down on my strikes to the 1920 strike. Okay, so we find the strike price by looking here. So we're going to go down. There's a bunch of them. Okay, and so the price here is 21. So I can actually buy this option at $21, and that's where I'm expecting the price to go. So then when it goes to 1920, when it gets to my target, I can just close this trade. And that's all you have to do is close the trade. And the option, if you can look, the option's pricing depends on volatility. But if you're looking at current price, it's around 46. And so if things continue on the way that they will, you could expect the price to be around 46 at this point, which is actually doubling your money, right? It's doubling your money, which is a pretty good investment. Pretty awesome to do. Now, so I'm going to buy, and I'm going to calculate the price. So this is doing 10 contracts. And so I don't really know how much that's going to be, but I'm just going to confirm this. And it's going to give me, let me get my face out of the way, it's going to give me the price, okay? So the max loss on this is $21,000, right? So we can't do that trade because $21,000, if my account balance is $200,000, we can't trade that. It just isn't going to work. So we're going to have to adjust this. So I'm going to close this and click Edit, and I'm going to change the contracts down. And let's just see how much it is with 2 contracts. Confirm and send. And with 2 contracts, the max loss is 4,200. Okay, which is right around the 2% mark that we're going. It's a little over, but with options you can't always do it perfect. So we're going to go at $4,200. So Amazon, even with options, it's very expensive to trade. Just buying 2 contracts is $4,200. So it's could be a little bit out of your price range, but with normal stock, most stocks aren't going to cost you $1,900. Normal stocks, you can do this pretty easy. And I can actually just pull up another one just to show you what. We'll just pull up another one real quick so you can see just a normal stock, what the options price would be. So you can see normal stock, the strike is currently $59. So we go to the 59 price point, which is here, and you can see your options $1.63. A lot different. You can buy a lot more contracts. So anyways, let's go back to the Amazon trade because that's what I have on the chart. So I'm going to take this trade, and that's all I'm going to do. Let me edit it one more time, make sure. So it's a limit order, and that's good. It's going to open when it comes, for the day, when the price opens. I want to take the trade, and I'm buying 2 calls. So I'm going to confirm it, and I'm going to send this trade through. Okay, so now I put out the order. The trade has been set up, and that's what I'm going to be monitoring. And then I'm just going to be watching these charts and seeing if it gets to 1920 and close it. And there's some, you can also close it when it hits a certain profit number. So if you're trying to double it, you can close it when it doubles. And just another note, when it hits 1920, I'm only going to close 1 contract. As you can see, I had 2. I'm going to close 1, and that will lock in profit, very similar to the way Tim's trade does. So if I close 1, I risked a total of 4,200. If I close 1 and I double that half, that half would actually be worth 2,000. So I would be closing 2,000 and be waiting for the second half to close if it goes up higher to the 2,000 range, which is where my second profit target is. All right, hopefully that was helpful. If not, just complain to Tim and let him deal with it. But thanks a lot. I want to thank Tim for doing a great job on this channel, and I want to thank you all for your faithful viewing and commenting and interacting with these videos. Let's make 2020 a great year.
Thanks, Casey. That definitely gives us something to work with. I downloaded and installed the Thinkorswim platform this morning. I'll put a link in the description below if you guys would like to do so as well. Let's take a look at the Amazon setup that Casey was talking about. This is the daily Amazon setup Casey was talking about. I identified this pattern a couple of weeks ago, but I didn't share it with you guys because I knew that it would take about $360,000 of equity to trade it. So being able to trade it with only $4,200 is much better. You will have to have a pretty good size account to handle a $4,200 loss, however, so be sure you maintain your risk parameters when you take these options trades. Keep in mind it's too late to get into this trade. This is simply for example only. As you can see, the first target would have been hit already right up here today. So please don't take this trade. It's already done its work. The nice thing about options is your trade risk is right in your face. When you figure out what it costs to buy the option, that's your risk right there. You put the money out to buy the option and you can't lose any more than that. I showed you situations in the past where some stocks could open way below your stop loss and you could end up with an unexpectedly huge loss. That won't happen with options, so controlling your risk is far easier. Another quick note, for the purposes of what we're doing here, you will always be buying options. If you expect the market price to go up, you will be buying call options. If you expect the market price to go down, you will be buying put options. We'll do more training on options in the future, and I'll include suggested options trades when we look at trade setups on stocks. Today's trading maxim is one I actually wrote myself. I was so proud of myself. 6 months ago I couldn't even spell philosopher. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 62. Make your decisions in advance of the emotions so you don't have to make them in the midst of the emotions. Always have a concrete trading plan in place before you enter the trade. Have a plan for each possible scenario that could occur. The more you do it, the better you'll get at it. Trading brings out all sorts of emotions, fear and greed primarily, but also dejection or elation. You can get pretty depressed when your trade is down and you have fear about taking the loss and moving on. Remember, it's better to take a loss early while it's small. So you need to identify what scenario would make you feel like your initial trade idea is gone and it's time to take the loss. On the other hand, you can get pretty ecstatic if your trade is moving wildly in your direction. But it can turn suddenly and you can lose all that profit if you don't have a plan in place for taking profit or following stops or something. Just remember, if you have a plan in place, you don't have to think through an emotional time. All you've got to do is execute the plan. Sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets with the possible exception of the last week of the year. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And please don't forget to comment below if you've got any questions about options trading. Remember to be careful trading for the next week or so. It's gonna be a jungle out there. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. And have a great weekend. And I'll see you next week.